Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 27th. Yes, I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I go a bit further and talk about option strategies that I'm implementing into my portfolio based on those assumptions I come up with from the market analysis. Also, I do some webinars where I talk about some guidelines that we need to specifically follow in order to implement any option strategy around a given assumption. There's a lot of little nuances to options that we need to understand in order to increase our probabilities of success, and I pass that on to you in those webinars and a little bit here in these daily market commentaries, but I don't have the time to really drill down on some of those. So please check those out at protraderstrategies.com. Also follow us on Facebook, where we put out a lot of content on a daily basis. All right, so let's talk about the economic data. Across the pond, really not a whole lot going on. It's really about the U.S. that's driving these markets today. You know, we are having the Jackson Hole Symposium. We had Powell speaking earlier today, really talking about lower interest rates for the foreseeable future. A bit surprising, we're seeing the bond yields start to increase as bonds come off. I think that it's overdone to the downside, so I've got some trades that we're talking about there later on. But let's talk about the U.S. data. We've got the preliminary GDP, which is gross domestic product, coming in at negative 31.7, expected to be a negative 32.5. So it's negative. It's terrible. Don't get me wrong. Better than expected. People are going to kind of take that and try and run with it a little bit. It's still not that great. Unemployment claims coming in at 1,006,000. That's a little bit higher than what was expected at 1 million. So, a little bit more claims, meaning more people claiming for unemployment than what was expected, but it wasn't very much. Not a whole lot to see there. GDP prices coming in at -2. That was expected to be -1.8. Now, remember, right now, most economists want to see prices increase because that shows demand and which would then increase prices, but we're not really seeing that there. Pending home sales, knocking it out of the park at 5.9%, expected to be 2.5%. It did revise last month's number slightly lower, but this number really knocking it out of the park and probably the biggest catalyst of driving this market. Now, we've not really seen a surprise here, as we have seen this number across the board with home builders to the buyers really driving this market. Pending home sales, not a sure thing, but this one is a pretty darn good number. Natural gas storage is a slightly higher build than expected at 45 billion cubic feet, expected to be 39 billion cubic feet. And that's about it for the economic data. Let's see what's going on with the overall markets based on that. We can see crude oil is slightly negative today, but for all intents and purposes, you guys, it is right there at the sweet spot. Oil being in the mid to lower 50 or mid to lower 40s is probably, I would like to see it obviously a little bit lower, but that's probably where we're going to see it kind of continue until we start to see real traffic jams start to pick up. I am seeing traffic build, but I don't think that it's anywhere near to where it was before. And I also don't think the manufacturing sector, which is really the big consumer of crude oil, not really picking up that much to cause that demand spike. All right, gold coming off by about 20 points, testing that Fibonacci that we've been talking about earlier today. Again, I do expect gold to start to make a push. I do think that they are, the government is going to come up with another round of stimulus, which means a weaker dollar and therefore strengthen the overall gold futures. As it is a dollar-denominated product, it should cause it to spike a little bit, but it seems that what we're seeing right now is another breakdown between the House, between the Republicans and the Democrat on this this particular issue, which is giving it a little bit of weakness today, as people are expecting it maybe not to go through. Bonds down by over 1.5 points. As you can see, we just ripped through that 61 Fibonacci and are near the lows of the day. But I do think that this is just overdone to the downside. Again, I don't think that we're going to see interest rates start to climb anytime soon. Some of this has to do with what Powell was talking about and causing a little bit of weakness here. And we're also seeing the equities really blast off. I mean, E-mini S&Ps we saw create a new all-time high again today. Well, I'll try and get to that real quick, but we are seeing the VIX spike as the market is rallying here. I think people are starting to look to put on some protection as we're seeing new all-time highs across the board. A lot of crazy news today on equities that we'll start talking about here in a minute. But Dow Jones, like we said, across the board, equities moving higher. Dow Jones not really holding back on the rally as E-mini S&Ps, as you can see, are making new all-time highs. NASDAQ making new all-time highs. E-mini S&Ps negative on the day, but creating that new all-time high again, as noted there. E-mini S&Ps here are up 5.5, testing that Fibonacci. I thought they were going to print 3,500, but just came up just shy of that. That is a day session print, as you can see here on the breakdown of the E-mini S&P 30-minute chart here. These are 30-minute candles and the breakdown of the overnight session to the day. So you can see the overnight move was pretty flat, but once we started getting our economic data here in the United States, especially on those pending home sales, really allowed this market to blast off and create those new all-time highs. Like I said, just coming shy of that 3,500 mark. Now the index did print 3,500, and people will call that as the all-time high, but the futures are forward-looking, and we just came up slightly shy of that. So seeing a bit of profit taking going on here, but I think that the overall markets are looking pretty positive today, with the FANGs really pushing higher, and a new couple of players in the space. We're just talking about Walmart here. Why? Because Walmart wants to get into the whole buying of TikTok realm, so they are thinking they are going to partner with Microsoft and join in on that, which is a bit bizarre. It seems like it's way out of their wheelhouse to start getting into something like social media. Probably want to get some of the data that these consumers of TikTok are producing, so I think that that'll give them some insight into their consumer at Walmart, and maybe try and have an opportunity to grab on to some of those younger people that will hopefully use Walmart, as what they're probably thinking, hopefully use Walmart down the road when they start their buying and getting out of the households. Anyway, with that being said, a couple of big movers there on that. I haven't really participated in those guys, but I did look at taking advantage of this big sell-off here in the treasuries that's causing TLT, which is the ETF for those treasuries, to come off as well. So I decided to take that opportunity. Low implied volatility. I have a bullish assumption. What does that start leading us down the road to? We talk about that in the guidelines, so check out the webinar on this strategy, which is the long call. So I went in and bought some calls in the November 170 calls for $2.55. Did it relatively small, but going to try and play this to the upside. Now, is it going to make it all the way back up to 170? I think it might. As a matter of fact, the reason why I kind of played that is because of this little gap that we've created here in TLT. So markets like to try and cover those gaps. Now, does it always happen right away? No. But I've given myself enough time by going out there in the long duration, limit that theta decay, take advantage of volatility if it starts to expand, because we do see really relatively low volatility for TLT at this time. So we start getting that move. I don't really expect volatility to necessarily come out. So if we can hold on to this volatility or get a spike in that volatility, that will work wonders for this trade. So playing the upside in TLT for this trade. Other than that, I haven't added anything, but I do have a good trade for a bearish assumption in high volatility today. And so check out that webinar at protraderstrategies.com, because I'm going to go into the details and the guidelines that I've set up using my 25 years of experience to try and streamline your process and finding the right strategy for any given assumption. And we'll start with that today in our roadmaps to trading option strategies using the short call spread. So check that out. I have some specific strategy or some specific guidelines we need to follow in order to be successful, or at least increase our probabilities of success with that bullish assumption. All right, so that's all I got, other than check out this disclaimer. We are an educational company. There are risks to trading that you need to be aware of. So please take a moment to pause this video and read over these points that we have brought to you in the disclaimer, I guess, for lack of a better phrase. I don't know. Anyway, that's all I got for you, other than if you can't take that, take it easy.